You have been trading other blocks in the wrong way, and it is costing you a lot of dollars, or let me say it is costing you your trades. Most traders are looking at other blocks completely wrong, and that is exactly why they keep getting stopped out before price moves in their direction. In this video, I will be showing you how to identify other blocks in forex trading. So also, I'm going to show you a simple smart money method to identify real order blocks, the ones institutions actually trade from, not the fake ones that destroy retail traders. Once you understand this, you will start seeing the market in a completely different way, and your entries will never be the same anymore. With no further ado, let's just delve in. First of all, what is order block? In a bullish scenario, order block simply means the last selling candle before a sharp movement that generates a valid BOS or choke. Or you can say the last, bearish candle before a sharp movement that generates a valid breakout structure, whatever you like, okay? And in the bearish scenario, order block simply means the last bullish candle before a sharp downward movement that generates a valid breakout structure. What do I mean by that? Let's make use of this illustration that you are seeing on your screen as an example. So, a quick illustration. This is the last selling candle. As you can see, this one here, this red, is the last bearish candle before you see market breaking out from this high. That's what I meant. Okay, I hope you guys can understand. So this is the last bearish, you can say the last selling candle, right, before the market broke out from this high. Okay, so that is just the meaning. Same thing applies to the bearish trend too, but this is bullish, as you can see. And also we have criteria to identify a valid order block too. Whenever you open your chart, there are things you need to see first before you can identify a valid order block. Let me undo this. Okay, there are things you need to see. First thing is price taking out liquidity, like liquidity sweep. What do I mean by that? This is what I mean by that. Let me be showing it to you guys one by one. Price taking out this low is what I'm talking about. That's the liquidity sweep. Okay, it might even be a liquidity run. Okay, liquidity run is the sense that this candle might probably close below this one, right? Then you now see another candle forming, something like this. But according to this illustration, let's just face the pictorial reference right here. Okay, so this is what I mean by liquidity sweep. You can see price swept this low before the momentum, then breaking out from this cemented high. So that is the meaning of takeout of swept liquidity. Okay, so market has already taken out liquidity. You need price to take out the liquidity before you can mark your order block. And another thing is inefficiency or imbalance. You must see an inefficiency alongside with liquidity sweep that led to the breakout of the cemented high. It is very, very important. Okay, it is very, very important. Sorry, wanted to delete this wanted to delete this. Okay, so there must be an inefficiency. Some people call it fair value gap and some people call it imbalance. Whatever you call it in your region is fine, just know how to apply it on the chart. So we have inefficiency here. As you can see, there is an inefficiency right here. As you can see, there is an inefficiency right here. So that is the second criteria you need to know before marking your order block. Then after that, it must be unmitigated. As you can see, we didn't see any wick mitigating this fair value gap. I didn't mean we see something like this, something like a wick mitigating this fair value gap. Now that means this fair value gap has been mitigated, so it's no longer valid. That order block is no longer valid. But because there is no any wick mitigating this fair value gap, imbalance, inefficiency, whatever you call it, that means these other blocks right here, it is valid. Okay, that is just the meaning. Don't forget, the first one is price sweeping liquidity, taking out liquidity. Second one is inefficiency. You must see inefficiency or fair value gap or imbalance, whatever. And the third one is it must not be mitigated. You can see this one has been mitigated. You can see this one here has been mitigated by this week. Okay, it has been mitigated by that week. And the fourth one is it must lead to a breakout structure or a change of character. Okay, can you see we have a breakout structure? So everything to mark your order block has been met. Number one, price swept liquidity. Number one, price swept liquidity here. Very good. Number two, we have what? Who can tell me? We have a fair value gap. Okay, we have an inefficiency. The market needs to balance. We have an imbalance. Number three is what? It must not be mitigated. This order block must not be mitigated. As you can see, we don't have a wick here mitigating this fair value gap right here. So it must not be mitigated. And number four, it must lead to a valid BOS, which is this. This is the valid BOS. Okay, cemented high has been, has been disrespected. So that means it has led to what? It has led to a valid BOS. It can be a choke too. Okay, so that is it. And as you can see, when markets make a pullback, let me undo all this. And as you can see, when markets made a pullback, what happened? Immediately market got here, what happened? Market started buying again to the upside. So it is as simple as that. That is how to identify another block. Okay, very, very simple. That is how to identify another block. So let's assume the price broke out from this high now. Let us assume price broke out from this high. Let's say we had something like this now. Let's say we had something like this. Okay, something like this. Let me change this to black. Let's say we have something like this now. We already have a valid order block again. How? Who can see it? Who can see the valid order block? We already have a valid order block. Don't forget the rules. Number one, the price needs to take out liquidity. This low here has taken out this low. So that means the price has taken out liquidity. That is number one. Number two, inefficiency. I know this is just a line. So definitely if it was a candle printed, definitely there is going to be a fair value gap somewhere here. Okay, let's just assume there is a fair value gap. And also the third one is it must not be mitigated. It must be unmitigated. So definitely there must be an unmitigation here if we have a fair value gap. And the fourth one is it must cause a breakout. Can you see? So let's just check the live chart so that you guys can see it clearly, because this is just a rough sketch. So you guys just needed to manage it like that. But on the financial market graph, it's going to be more clearer. Okay, so let's just check the financial market graph. Okay, so let's see. So your directional bias is very important. You already know, or you guys already know, that your directional bias, it is very, very important. You need to know what the market is doing. But according to this one, we have a breakout here. Okay, we have a breakout here. Let me give this thing black. We have a breakout there. Then where is our order block? Anyone? I told you guys. What did I tell you guys? How did I divine the bearish order block for you guys? I said the last buying candle before the momentum came in, before you now see a breakout structure. So this is the last buying candle here. This is the last buying candle. Let me change this. So as you can see, let me show you guys the last buying candle first. First of all, this is the last buying candle. This blue line is the last buying candle. Okay, then after that, what happened? We see this bearish engulfing it completely. Okay, and not only that, what happened? It led to what? It led to a BOS right here. So those are the criteria things you need to see. And another thing is there is what? There is a fair value gap right here, as you can see. I hope you guys can see. And the fair value gap was not mitigated yet. As you can see, it wasn't mitigated yet. Okay? So those are the things you need to know. You need to know all of this for you to be able to mark your valid order block. Like order block that's gonna work, that's gonna hold the price. So we have another block here. As you can see, price has not yet broken it to the upside. So definitely we are still selling. We still have this high as our last high. That's still our protected high. So definitely we are still going to be looking for sale. Okay, that is just, I'm not talking about to enter trades or whatever. If you want to know how to enter trades, like if you want to know how to execute trades, check the recent videos. A lot of videos are there for you to check on this channel. So I just want to show you guys how to identify another block, and that is it. This is another block. Don't forget the rules. Let me repeat again. Number one thing is that there must be a what? There must be a liquidity sweep. Yes, we have a liquidity sweep. As you can see, this was the last high. This green candle, I don't know if you guys can see it. Let me zoom a little. This hammer candle was the last high. So this additional candle took out the high of this before we see this bearish engulfing candle. So market has already taken out liquidity. Okay, market has already taken out liquidity. Then after that, the second thing is inefficiency. We have our inefficiency boldly here. All of you can see right here. Then after that, it is unmitigated and it led to what? To a BOS. It's as simple as that. Okay, so that is it. So we should still be looking for what? For a sale. But let's look at what quickly happened here. This is 4 hours time frame anyway. I hope you all can see. We have a breakout here, abi. This is a breakout here. Don't forget, you can still trade, you can still counter trade the trend also. Then according to our bullish order block rules, the first thing is for you to do what? The last selling candlesticks before the momentum that broke out from the breakout structure, that broke out from the cemented high, is our what? Is our order block. Okay, now we have this selling candle. This is the last selling candle. This one here is the last selling candle. Why is it the last selling candle? Who can tell me why? Who can tell me why? Okay, the reason why it is the last selling candle is because it took out liquidity here. I don't know if you guys can really see this. I don't know. This here, this last selling candle here, this one took out this liquidity, took out the low of this candle. I don't know if you guys can get it. I hope you guys can get it like that, because I can't do it more than this. Okay, so this last candlestick took out this low. That is a liquidity sweep. First thing first. That is the first thing you need to see. Then after that, what happened again? You must see a what? An inefficiency. Definitely there is an inefficiency. This is a very big and nice inefficiency. This is another block, as you all can see. It's another block right here. Sorry, I'm saying another block. It's a fair value gap, right? I wanted to say fair value gap. So this is a fair value gap. It's an inefficiency, it's an imbalance. Anyone that you like, you call it, it's still the same thing. So we have that there. And another thing is what? It must not be mitigated. As you can see, it wasn't mitigated yet. When market break out from this cemented high, as you all can see, this fair value gap wasn't mitigated. Had it been this bullish candle, had it been we had a week like this, then we can say it has been mitigated. But fortunately, there wasn't a week like this after the breakout, so it wasn't mitigated yet. Okay, so that made it valid. Okay, then after that, what is the fourth thing? It must lead to a breakout. So we have a quick and sharp breakout here too. So then you just mark your order block, as simple as that. Then you mark it like this. That's how to mark order block. Then easy peasy, no stress. That's how to mark it. Then anybody that is buying, just make sure your stop loss is below. Just make sure your stop loss is below. Something like this. Give it a little breath. Then you target the external range. I'm not really teaching how to trade. I'm not really teaching how to execute trade here. I'm only showing you guys other block, but still, I still need to talk about it, okay? So that is just it. Very, very simple. If you can follow those criterias, you wouldn't have any problem identifying a valid what? A valid order block. And as you can see, another story happened here. We have another BOS here. What are still the things for you to, what are still the things you need to see? What are still the things you need to see? The last selling candle before the what? Before the breakout. The last selling candle before you see a momentum breaking out the cemented high. This here now is the last selling candle. As you all can see, this here now, this one here is the last selling candle. How? It took out this low. There must be a liquidity sweep. It took out this recent low here. So that's the liquidity sweep. Okay. Then after that, we have what? We have inefficiency. You can see inefficiencies within these candlesticks. Then after that, they were unmitigated, as you can see too. There wasn't any wick mitigating it, and there wasn't any candlestick coming back to mitigate it, as at the time these candlesticks are printing to the upside. Okay. And the last thing, it led out to what? To a BOS. Very, very simple. It led out to a BOS. This is the BOS. So how do you now do it? You just mark your order block. Easy peasy. Just mark it like this. Just mark it like this. Easy peasy. Don't forget this 4 hours time frame. Just mark it like this. Easy peasy. So we are still scalping the counters buy. Then it's still fine. Then you still target the recent high, or you target the internal, anyone, and it is fine. You are good. So that is how to mark a valid order block. Okay. So very, very simple. Let's check, and let me check one more pair for you guys. Let me check one more pair for you guys. Let me check one more pair. So marking order block is simple. Don't forget, number one, price must take out liquidity. Number two, you must see inefficiency. Number three, what is number three? Who can tell me number three? If you know it, type it in the comment section. 1, 2, 3, 4, 5. It must not be mitigated yet. Okay. And number 4 is it must lead towards to a breakout structure. Easy peasy, no stress. So let's quickly do some kind of thing here. As you can see, we have this breakout here now. This is the last low. Market broke it out. Then where is our other block? Don't forget the rules. We have an other block here, but you can mark it completely, or probably let me mark this has been mitigated. This is what I'm saying. This I even like this example. I didn't even know I'm going to see something like this. As you can see, we have another block here, right? As you can see, we have another block here. But what happened? Who can tell me what happened? Don't forget, a liquidity sweep is very important. We had our liquidity sweep here, then it led to a valid breakout structure here. Okay. So who can tell me what happened here? It has been mitigated. That fair value gap that was here has been mitigated. As you can see, there is a very small fair value gap within this range. I don't even know how to show you guys. Within this range and this close of the candle. I don't know if you guys can get it. I don't know, but if you have to watch this video for like 10 times, you should watch it so you get it. So there is a fair value gap within this high here and the close of these bearish candlesticks. So first thing first, this candle here, these candlesticks here has already mitigated. It had already mitigated the fair value gap. Not only that, we still have another pullback that came back again and mitigated it. So that means that other block is no longer valid. That is the meaning. That means the other block, as at that time right there, was no longer valid. Why? Price has already mitigated it. Okay? Price has already mitigated the other block. But what happened? We have another one. We have another clean other block. Yes. But don't forget, if you are marking your order block, first thing first, just know your protected low or high, depending on the directional bias. So we know these are our protected high, markets must not break it, okay? Then we have another order block here that price has not mitigated after the breakout. Can you see? Can everybody see now? Can you guys see now? I hope you all can see here. So we have this other block here. You can see it was unmitigated before this breakout occurred. So this place was unmitigated, and we have a very wide gap. So if you want to execute your trade, you should be looking at this region mostly to execute your trade. But don't forget, we have a protected. So because I now say you should be looking at that region doesn't mean you should be placing your stop loss above the other block. No, you shouldn't be putting your stop loss here. No, if you want to execute the trade, you shouldn't be putting your stop loss. Let me put it here. You shouldn't be putting your stop loss here. If you still want to execute this trade successfully with no, with no any manipulation on the chart, you should still be putting your stop loss above the what? Above the protected eye. Okay? You should still be putting your stop loss here above the protected eye. So that's how it's supposed to be. So because I said this place has been mitigated doesn't now mean you should be putting your stop loss here. No, it's not like that. Okay? So that is just how to mark order block. I hope you guys can get this video right. I just hope you guys can get this video right. I hope you guys can. Let's check for another example. Okay, I think we still have another bearish example here. Don't forget, after this breakout, what happened? Market make a pullback. Then we have another breakout here. Same story again. Our high has been transferred from that side to this side now. We have this as protected high. Then where is our order block? You can go to any time frame to get more valid order block. Okay, you can go to any time frame to get more valid order block. So where's our order block? You can see that right here we have another block here. There is a space here. There is an imbalance here. Market needs to fill it. But where is the problem? You know there is a problem. I don't know if anybody can see if there is a problem. There is a problem because we are not seeing any liquidity sweep. You can see all these candles. You can see all these candles here. They are not weakening out from the recent lower high candle. But we have one here. This one here weak out from this bullish candle here before the market broke out from this low. So definitely this eye is a protected eye. You need to open your eyes very well so that you can understand. Then if you want to sell, you can just mark this other block here now. Then if you are that kind of person that enter trades aggressively, then you put your sell limit, but make sure your stop loss is still above this side. Then you target wherever you want to target. So that is how to identify. I'm trying as much as possible to break this order block thing, like to break it down, to the lowest level I can. Okay, I'm trying as much as possible to do that. But if you need to watch this video more than 1, 2, 3, 4, 5 times, you should definitely do that so that you can get it. So let's check if you're still gonna see the last example that I'm going to be showing you guys. Last example. You just need a breakout. Just look for a breakout. Look for a breakout structure. It is very, very important. I don't know if you are going to see another one. Let me go to 8 hours time frame. Like I said, you can go to any time frame just for you to identify, because I'm seeing something somewhere. I didn't even see. Can go to any. Okay, I think somewhere here there is something here I need to check out. So as you can see, we have this low here. I think there is a low here. We have a liquidity sweep here. Then we have this high. So price broke out from this high. Definitely, where is the other block? If you want to counter buy this trade, where is the other block? We have another block here. This is our valid order block. Can you see? That is our valid order block, as you can see. So we have another block here. Okay, why? First thing first, we see what? We see the last selling candle before the buy, then cost this breakout. That's number one. Number two is we have a liquidity sweep. These candlesticks, this dodgy candlestick weak out from this previous one. Okay, this doji weak out from this previous one. That is number one thing, liquidity sweep. Number two, it is unmitigated. Okay, number three is there is a fair value gap, and number four is it led to a breakout structure. So when you see when markets come back to it, although there was a manipulation, but still, if you're an aggressive trader, you might be stopped out. But if you're a conservative trader, definitely you are going to see entry here. Okay, you are going to see entry. So as you can see, that's why I said whenever you are entering the trade, you should give your stop loss a little break, a little bit of breath. Okay, this let us even check the because this is just an unfiltered analysis, like how it is. I'm pouring it out to you guys how it is. So this is the last low here. That's why I say you should always give a space, a little space. But let's say you use the last low, you use the protected low, you would have getting stopped out. You can see this week out the something, it weeks out the low, so you would have gotten stopped out. But I didn't being you give a little breath, you might still get stopped out anyhow sha. Don't let just try to manipulate stuffs. Okay, you might still get stopped out if you definitely occur to be an aggressive trader. You might still get stopped out, but if you are a conservative trader, definitely you are not going to get stopped out. You know when to execute your trades. Okay, so I have a videos on that on this YouTube channel. You can just go check, and then you know how to be a conservative trader. Okay, don't be an aggressive trader. Okay, you can just mark your order block like this, then wait for price to come back to it, and when price comes back to it, then you will now be looking for what the price actions are printing. That is when you can say you want to delve into the trade. Not like you just pull your buy limit like this and pull your stop. No, you don't trade like that. Only if you're an aggressive trader you can trade like that. But if you are not, definitely you need more conferences to trade. So I think with this video you guys should be able to uh get how to identify order block in forex trading. Okay, and like I said, you need to watch this video, like I think anytime that you like. You can watch it in an opportune times for you to get how to how to really identify another block on the financial market graph. So if this video has really helped you, you can subscribe to this channel, share to your friends, especially your friends that are trading, that are also finding it difficult to maneuver their ways on the technical analysis on the financial market graph. You can definitely share it to them for them to learn. Don't forget to comment, like, and if you have any topics you want us to cover, you can still drop it in the comment section. So we are going to be covering it just like the way we are doing this currently. Okay, so thanks.